This is a company I've owned for a couple of months. It's called Symbotics. It actually makes the robots that go into distribution centers that are replacing human beings, and they've gone into a agreement with SoftBank to do it for smaller companies as well. But their mainstay business is if you are Amazon or you're Target or Walmart and you have a distribution center where you're employing people and you want to replace those people with robots and have artificial intelligence basically tell those robots what to do, Symbotics is the company. It's, as you can see here from their balance sheet, they are relatively, this is their income statement. They are a relatively new company, have only been around since 2019. But look at their growth of their company. It started in 19 at a $100 million company, 92, 250. Now it's almost a $600,000 company. So they're growing dramatically. They were losing money. They now have a gross profit. And then what I wanted to know is how are they going to fare with this increase in interest rates, and is that going to harm them? And I look down here and I see that their interest expense is a negative number. They've actually got people paying them interest, and then the issue is then they're a nonprofit at this point. So if interest rates go up, are they going to be in a crunch? As you can see, they've improved their situation. They were basically losing over $100 million a year. They're down to $77 million. So then I want to go to their balance sheet and get some indication here of what's happening. And on their balance sheet, you can see their assets have tripled over the last 3 years. Their short-term debt is none. Their long-term debt is none. Their total debt is none. Their net debt is that if they've got over $350 million available if they should need it. Now, what's bringing their liabilities up is that their deferred income. This is income that they have been paid for services that they have not yet delivered. And so what I believe that is, from having sat in on the interest call or the earnings call, is this is the people, they have a backlog of, I believe, 12 years of orders that people have made deposits on and said, when you finish, the Target and the Walmart warehouses come to ours, and that's their deferred income that they have had, but they have to show that as a liability. So that's what kind of screws some people's heads up who don't understand what their business is. So then the next thing I wanted to do was look at it from a point of view of what is the market doing with this stock and how are they interpreting it. So there I want to go to technical analysis. And this is their chart. As you can see, they ran back in April of 23. We're running it on here. And then they had their earnings report and their stock shot up. And a similar thing happened again in late July. But then with the market pullback and the fear of interest rates, and people aren't willing to look and see what interest rates are going to do for a company that is not making money, you see the stock pulled back. And that's because people look at it and say, hey, this is a company that's not making money. They're going to have to pay money they're going to have to pay higher interest on their debts, but they don't have any debt. Okay, so you see it came almost down to the 200-day moving average. All right. Now you can see on the MACD, it's turned and started to go up. On the Scholastic, it's turned to go up, and the momentum of the market is turned to go up. So what am I going to do? I'm going to buy some more, but don't tell anybody. I'm going to buy some more because nobody else digs as deep as I do. So that's what I am all about. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I don't have a whole lot to do, so I just invest my money and dig deeper and gain a fiscal and a technical understanding of the stocks I want to own, and I go pick winners. Now, will this potentially drop as the fear comes into the market? Yeah, because there isn't knowledge behind that fear. but I know something that you didn't know and most people don't know. Kerry Grinkmeyer, Best of Us Investors. I'm here to help you make money, and I think the quickest way to make wealth is to get on the bus.